More problems for Bank of Jinzhou and other regional Chinese banks. So my top China source sent me some more articles last night for me to take a look at. They're from Bloomberg News from September 2nd, 2019. Rescued China lender suspends payments on dollar securities. A regional Chinese lender under the spotlight for liquidity strains plans to suspend dividend payments on its offshore preference shares, sending indicated prices on those securities tumbling. And guess which bank it is? This is the Bank of Jinzhou, which has had a lot of problems now for the last couple months that have been coming to light after Baoshang Bank. Bank of Jinzhou is, I believe, twice the size of Baoshang Bank, and I have covered this, unlike the gold community, which doesn't want to admit that China has any problems at all. China has no debt problems. China has no bank problems. In fact, there's still experts going on Greg Hunter's program saying that there's no problems at all with European banks, no problems at all with China banks. Everything is hunky-dory. Everything is fine. Everything will be fixed. No, nothing to worry about here. There are only problems in the U.S., and that is all that matters. Look, I respect people like Catherine Austin Fitts. I think she's brilliant, but I 100% totally disagree with what she said on the last Greg Hunter interview that she did, saying that she's not worried at all about Europe and European banks. She's not worried at all about Deutsche Bank when the German government doesn't even have the resources to handle Deutsche Bank by itself, when the European Central Bank doesn't even have the resources to handle Deutsche Bank by itself, let alone the combination of all the other banks with the Italian banks, the Spanish banks, the French banks, the other German banks, etc., etc. And then she also says that there are no problems in China with Chinese banks. Greg Hunter asked her a question, and 1 minute later, it's waved off like it's no big deal. Happy Labor Day to everyone. To our listeners here in the U.S., my thoughts and prayers are with our listeners here in Florida. I know that there are a lot of listeners in Florida who are retired and trying to survive the hurricane. Hopefully they are escaping. They've already gotten out of there. Or if they're hunkered down, hopefully they have taken the precautionary steps. It does not look, Hurricane Dorian looks very, very bad. So my thoughts and prayers are with you guys. But the Bank of Jinzhou, more problems for the Bank of Jinzhou. Looks like they have suspended their ability to pay their dollar payments. Okay, let me continue with this article. The mainstream media, guys, is at least putting out some of these articles about China. I found, besides my source sending me a couple articles, I found with additional research, another 4 or 5 other articles. I'll read you the headlines and a few of those others in a little bit. But as well, the Zero Hedge, unfortunately, guys, Zero Hedge is not covering this. I spent about 30 or 40 minutes looking through Zero Hedge right before I started this live stream show, trying to find the stories, confirmation on Zero Hedge about problems with Bank of Jinzhou, problems how they're having real big problems making their dollar-denominated debt payments, and how basically they're not going to get help from the People's Bank of China or the Chinese government. Okay? So the dollar-denominated debt, the Chinese government seems to not want to help pay for the smaller regional Chinese banks like the Bank of Jinzhou and others. So I think their dollar shortage is real. Have I thought of retweeting it to Zero Hedge? Yes, I've tried sending this stuff to Zero Hedge in the past, and they don't seem to listen. I think there are employees at Zero Hedge who do listen to this podcast, and some of my work ends up not cited or sourced. It ends up, some of the stories do end up on Zero Hedge from my podcast a couple days later. But Zero Hedge has no coverage of additional problems at the Bank of Jinzhou. Thank you for suggesting it, Carlos. I appreciate you trying to help. But yeah, they don't really pay. My Twitter account's not that big. I don't even have 5,000 Twitter followers. My YouTube account is much larger. So let me continue with this article here. Bank of Jinzhou, which was the subject of a government-orchestrated rescue in July. Remember, I did a video on it then, talking about how it was very similar in the type of bailout, similar to what JP Morgan, the U.S. federal government, the Treasury Department, the Federal Reserve told JP Morgan to take over Bear Stearns. That was very similar to the equity investments into the Bank of Jinzhou, how one of China's 2 largest banks had to make a equity investment into the Bank of Jinzhou, along with 2 distressed debt companies had to make equity investments into Bank of Jinzhou. This may not be enough, guys. I'm going to talk about this why in a little bit. through this article and some of the other articles. So the government orchestrated rescue in July said Sunday that it's seeking shareholder approval to halt dividends for the year through October 26. These dividends, guys, are on their dollar investments. So Bank of Jinzhou was supposed to pay dollar dividends based on their dollar bonds. Okay, that's after its capital adequacy ratios failed to meet regulatory requirements. I have more articles on this in a little bit. I did additional research and found about 4 or 5 other articles, including one this was pressreader.com. This was a translated Asian article into English from August 31st, 2019. And the large bank, one of the 2 largest banks in China, ICBC, it's awaiting an audit of the Bank of Jinzhou. So they're awaiting an audit. They're trying to find out what the damage is. They're trying to find out what the damage is for Bank of Jinzhou, and let me tell you, they're not going to like it. Okay, let me continue with this Bloomberg article from September 2nd from earlier today. The bank's dollar AT1s, so the riskiest type of bank bonds, tumbled by some 20 cents on the dollar, according to traders contacted by Bloomberg. That suggests the news came as a surprise to some market players, even though officials had moved to shore up the lender in the wake of the seizure of one of its peers by regulators of a raft of troubles. So what I would think, based on what I just read here in the paragraph, is even though the regulators are involved, even though the bigger state-owned enterprise Chinese banks that are government-backed are involved with Bank of Jinzhou now, they're still big, very, very big dollar-denominated debt liabilities, dollar-denominated debt problems. Okay, if the problems were only RMB debt, were only RMB problems, they could have just swept this all under the rug or printed it all away. Okay, you would not be hearing these stories. And this adds to my thesis, adds to Kyle Bass's thesis, and I agree with a lot of what Kyle Bass is saying. I don't agree with everything of what Kyle Bass is saying, but I agree with his major thesis that there's a lot of evidence that China does have a dollar shortage, because if China had a dollar, it did not have a dollar shortage. Why would they let the Bank of Jinzhou have problems with their dollar-denominated debt here? Okay, so continuing with the article, quote, it would be a shock to some investors who view Chinese bank AT1s as fixed-rate bonds and is likely to affect the ability of smaller banks to issue them and the price they have to pay, said David Marshall, co-head of Asian Bank Research at Credit Sites Inc. Bank of Jinzhou is one of several smaller banks in China that have come under extreme pressure as the economy has slowed and loans have turned sour. Authorities have tried to restore the health of these struggling regional lenders, a key source of credit to small and medium-sized companies, while avoiding the moral hazard dangers of a government backstop that safeguards investors against losses. So basically, the Chinese government and the Chinese state-owned enterprise banks are trying to walk a very dangerous tightrope here. So they're trying to make credit more available, flowing again to the smaller Chinese regional lenders while avoiding the moral hazards, dangers of a government backstop. Basically, they're trying to do something impossible. If I could summarize it succinctly, they're trying to do something impossible. They're trying to do a bailout or do a partial bailout without creating any more pain. But their problem, again, is the dollar-denominated debt. Their problem is the Chinese government does not want to fork over the dollars to deal with this. So on Friday, the Bank of Jinzhou made its first earnings announcement in a year. That is a big red flag. That is crazy how they had not had to report earnings for a year. Reported its first ever loss. The bank reported its first ever loss of 4.6 billion yuan or 642 million. I can guarantee you the real numbers are a lot worse. For 2018, Bank of Jinzhou's capital adequacy ratio, a key measure of financial strength, slumped to 7.47% as of June 30th, from 9.12% as of December 31st, and 11.67% in 2017. So if you don't understand what that means their capital adequacy ratio, their reserves against loan losses and other bad investments, bad loans, bad bets, has gone down. It's gone down every year since 2017, and I can guarantee you guys that those numbers are even worse than the numbers that they reported. Because again, this is all about the China hustle. Things are almost never, either never or almost never, what they seem in China. Not that other governments and other countries and other banks don't lie, but the accounting fraud is, from what I'm hearing, is, and you can go watch the China Hustle documentary, think for yourself. I've been China hustled years ago. by a small Chinese company. I lost hundreds of dollars. There's a lot of listeners to this podcast who lost a lot of money on who were bullish on China in the past and have been burned that you can't trust Chinese accounting. Not that American accounting is that much better, but Chinese accounting basically can be two entirely different sets of books. The figure is now, and in China, they can get away with it against foreign investors. They don't go to prison. The figure is now well below, and I'll talk about that in a second. I just found an article about that right before I started recording. The figure is now well below the 10.5% regulatory minimum for China's non-systematically important banks. So Bank of Jinzhou is in violation of the regulatory minimum for the capital adequacy ratio, which means they're in violation and problems again. So they have to either raise equity, they have to raise equity for more cash, they have to sell other assets for cash, and some of those assets might be bad collateral or not worth anywhere near the amount that is stated on the bank's books. So that means they're going to have to do another capital raise. That means there's going to have to be more equity bought maybe by another large Chinese state-owned enterprise bank or another engineered investment that the Chinese government and the People's Bank of China, which is their central bank, and the Chinese banking regulators are going to force to try a similar continued Bear Stearns. And it's very interesting that China has decided not to fully take over this bank. Very interesting that they have decided not to do that, not to go the Baoshan Bank route. Bank of Jinzhou's non-performing loan ratio surged to 6.88% in June, and it's an increase from 1.04% at the end of 2017. So it's more than a six-fold increase from 18 months, basically, from the end of 2017 to June of 2019. And I don't believe those numbers. I think their non-performing loan ratio is probably a lot more than 6.88%. So with the bank's core Tier 1 capital adequacy ratio at 5.14% at the end of June, it's, quote, barely above the so-called loss absorption trigger of 5.125%, according to Nicholas Yap, credit desk analyst at Nomura International in Hong Kong. Any further deterioration could result in the offshore AT1s, that's those dollar bonds that I was talking about earlier in reading the article, being mandatorily converted into H shares. So it sounds like bad convertible debt. And the bondholders then would be exposed to further risk. They would be exposed to being wiped out with bad bank equity, especially if the Chinese government and the People's Bank of China forced more government investment, or some type of state-owned enterprise investment into the bank. Normally, bondholders only like to convert from debt to equity if the share price of a company is going up a lot. Otherwise, they want to stay in the debt. They want to stay ahead of the line or farther ahead of the line in the capital structure. And they want normally their more secured interest payment. So referring to the bank's Hong Kong listed stock, which has been suspended, the bank's Hong Kong listed stock has been suspended since April. Investors have been jittery ever since the shock government takeover of Baoshan Bank in May, which imposes losses on some creditors. That move had sent borrowing costs for lower-rated banks soaring before moves by regulators to ensure liquidity helped that premium come back down. Among the steps officials took to ring-fence the situation was a rescue for Bank of Jinzhou in July that saw Industrial and Commercial Bank of China, which is ICBC for short, and two other state-owned firms. Those are the distressed debt money managers, which the Chinese government basically forced them to buy equity stakes, agreed to buy at least 17% of the lender. I heard that it was more than 17, maybe it's 17% each. I was under the impression that it was going to be like 40-something percent, if I remember the press release correctly from July. I remember 40% of the equity total, and I was wondering, this bank is in a lot of trouble. They're going to have to buy a lot more than 40% because the assets, the dollar-denominated debt's a problem. The assets are probably overinflated, way overvalued, and they have bad collateral. The news on Bank of Jinzhou reverberated through the AT1 securities of other smaller regional banks in China on Monday, with Bank of Jinzhou, Zhengzhou, Zhengzhou, and Bank of Qingdao, 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 both indicated at 4.5 cents lower according to credit traders. A Weishang Bank security fell by 1.3 cents on the dollar, the most in about 3 months, according to data compiled by Bloomberg. So these other AT1 securities and other credit instruments from these other regional Chinese banks, creditors are starting to get spooked again. Remember, Chinese interbank lending froze up after the Baoshan Bank started. There was spooks when the creditors were starting. Some of the creditors were getting 30% haircuts on their investments. So we could have this again. The Chinese government, the People's Bank of China, the large Chinese state-owned enterprise banks were telling us that everything was solved, and this is starting to flare up again. And all this, guys, in my opinion, is because of dollar-denominated debt and a looming, growing dollar shortage. Quote, as far as we know, none of the other small banks with dollar AT1s are at risk of coupon cancellation at present, as none have made sizable losses and all are still reporting capital ratios above regulatory requirements, Yap said. Even so, current valuations do not adequately compensate investors for the risks. He said, expecting premiums on small banks' AT1s over those from large banks to rise. So you could see a lot more problems in Chinese banks flare up. And again, this, like I said, this is not about RMB debt. This is about the dollar-denominated debt. This is about China's dollar shortage, which is growing, and their dollar-denominated debt. Another story my top China source sent me that also came out today from Reuters, Engum Tham and Cheng Leng, bankers, exits, and zombie accounts, China's Shanghai Free Trade Zone. So I'm not going to read this whole article. I read it thoroughly last night. But if you want to read it for yourself, it basically talks about how the free trade zones in China are a disaster. How all these banks and all these corporations are pulling out because even though they were supposed to be free trade and easier and act like offshore instead of onshore investments or onshore instead of offshore business development. How the investments into the free trade zone were supposed to have like tax exemptions and less strict capital controls, and they were supposed to act more like offshore investments rather than onshore investments. There was, in order to just wire money into a free trade zone in Shanghai or Beijing or other areas, and these areas are empty now, by the way, guys. And it's a combination of China's stricter capital controls and the trade war tariffs and just in general too much rules, regulation, red tape involved in China, that these free trade zones have turned into basically busts. They're empty, and there's the banks that are there, the Chinese banks that are there in the free trade zones are not doing business with foreign companies there. So if you want to read about that, another story which I found on my own through research a couple minutes before I started this live stream, is China banking regulator uncovers rule violations among smaller lenders. So this is from Reuters in Beijing on August 30th, so a few days ago. China's banking and insurance regulator said on Friday a series of small and medium-sized bank inspections has uncovered a number of rules violations and misdemeanors. The China Banking and Insurance Regulatory Commission, CBIRC, said lenders were found to have contravened rules by lending to undercapitalized real estate projects, to over-indebted local government platforms, and to firms found to have seriously violated environmental laws. As the economy slows, smaller banks are under increasing pressure after new asset management rules cut off a major source of income and as bad debt from struggling borrowers mount. The CBIRC also pointed out a number of corporate governance issues, including shareholders who have financed their shareholding via trust loans, the long-term absence of senior personnel, lack of performance appraisal for management, and lack of concern about related party transactions. 3 regional banks have been bailed out by Beijing this year. Large state banks acted as, quote, white knights in some cases of sector consolidation, with ICBC announcing 30 billion yuan investment for a 10.82% stake in the troubled Bank of Jinzhou. The CBIRC also said risk management and internal control requirements are often not in place in regional Chinese banks. Some lenders have little internal accountability, and there were cases where signatures and seals were falsified on guarantees. Which sounds a lot like felonies more than misdemeanors. And that just adds to the validity of Denny McMahon on China's Great Wall of Debt, all the stuff he was talking about in that great book about the local government finance vehicles and them and the local governments creating dummy corporations to illegally borrow money against Beijing's wishes. and just load on trillions of dollars extra in debt. Loan funds were also found to have been misappropriated. For example, money was lent to a trading company, but then used by an entity other than the borrower. So this would be potentially fraudulent. It sounds like a bunch of shell companies. This also happens in other countries as well. In some cases, high consultancy fees were charged even though no real services were provided, the CBIRC said. Quote, all local small and medium-sized banking institutions should pay attention to strengthening internal control, plugging loopholes, and improving mechanisms, the CBIRC said. In my opinion, this is too late. Excuse me. I need a drink of water. In my opinion, I think this is too late. I think that the damage is already done. The damage has been laid in the last 10 years since the 2008 financial crisis. So all these small and medium-sized regional banking institutions should now pay attention to strengthening internal control, plugging loopholes, and improving mechanisms to avoid fraud and bad loans. It's too late. The damage has already been done. There's a lot of dollar-denominated debt. The RMB debt, the Chinese government and the People's Bank of China can deal with a lot more easily. The problem is, again, that the China bulls will not admit, the gold community, most of them will not admit, is the dollar-denominated debt. Because they say, oh, China has this petro-yuan contract, China's doing oil deals with Russia. Meanwhile, a lot of the gold community either doesn't know or refuses to acknowledge that as soon as Russia sells China oil in RMB, Russia, in a very short amount of time, within a couple months, dumps all that RMB onto the offshore Forex market, and then the Chinese government has to buy it up, sell dollars to buy up the RMB again. Just a bunch of, and then another new Reuters article. This one's on this one's on Nasdaq.com from Reuters from August 28th. China considers new rules for smaller banks to limit risk. Well, they can put in the rules now. They can put in the rules now, but I think it's too late. There's going to be a lot more pain coming from the dollar-denominated debt and the dollar shortage, and the trade war is exacerbating it. And then this article is from the New York Times. All these articles, guys, will be in the information and description section. China's banks face earnings squeeze amid rate reform, trade war gloom. So there's going to be more pain from the banks. The banks are going to face an earnings squeeze amid the rate reform and the trade war gloom from Reuters. China's banks face pressure on earnings and asset quality in the coming months as interest rate reform squeeze margins and the trade war continues to mount. Okay, thank you, Mr. XYZ, for the super chat. Prediction for precious metals in dollars by the end of the year. I would have been very happy with silver to close above 18 by the end of the year. But I think if this continues, guys, we could see silver test 20 by the end of the year. I'm not sure if it will stay above 20. We'll see. I think silver now will probably close at the end of 2019 above $18 an ounce in US dollars. And gold has a legitimate shot to get above 1600, 1650 range by the end of 2019. I think gold has a very good shot. The amount of really bad stories, or the oil market, I probably should do another video, another show on the oil market. It looks like OPEC, the finances of the OPEC countries are in truly desperate shape, and OPEC has just given up, and OPEC is about to start flooding the global economy with even more oil supply. So that is another sign. Most people are unaware of this, but if you study the oil market, whenever OPEC gets in trouble, they normally do not cut oil production. They normally increase oil production. I know it's counterintuitive, but they need the dollars. So they increase oil production and they try to make it up on volume and they get the dollars. Platinum has been having a rally lately. It looks like money has been going into platinum on the rally. Sprott just sent me something in the email earlier today. Okay, guys. Well, that's it for right now on the Bank of Jinzhou. So, more bad news for the Bank of Jinzhou. A lot of red flags there. And a lot of people, unfortunately, in the gold community, there is no bank, according to them, there is no problems in the Chinese banking system. It's no big deal. I tend to be on the side of Kyle Bass, though, that it is a big deal. And where there's smoke, there's fire. One last thing, the shares of, because we got listeners asking about this, the shares of HSBC Bank are still below 36 at $35.90. However, it looks like two new large banks in the West were just added to China's angry list, naughty list. Citigroup and BNP Paribas, the French bank, may have also leaked information to the U.S. government for the criminal case against the Huawei CFO Meng Wanzhou. So if you want to take a look at that, I'll put that in as well. So those banks may be on the hit list for the Chinese government as well. Okay, guys, that's it for right now. Everyone have a good Labor Day if you're an American. And if you're in Florida, my thoughts and prayers are with you that you don't lose your property or any health problems or any injuries from the Hurricane Dorian. Be safe.